Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and I've asked John Phillips, he's the Managing Director of Blue Energy, ASX code is BLU, to come and give us a little bit of an update because, of course, it's in the news at the moment, all this gas pricing and gas caps and all the rest of it. We'll get into that, but I wanted to ask John what he's done. Last time we spoke was about 3 months ago. I know he's been busy, and I think it's a really interesting time because not only that, John really has an understanding of the macro and also what they're doing at Blue Energy. So, John, great to see. I was about to call you Blue. John.
Blue tie.
Blue tie, there we go. Good to see you, and welcome back to Small Caps. Before we get into what you've been doing since I spoke to you last, brief overview of who are Blue Energy.
Okay, thanks, Kerry, for the opportunity. It's always a pleasure talking to you and your viewers. Blue Energy is a small Australian-listed explorer, hopefully producer based in Brisbane. As you've mentioned, our ticker code on the ASX is BLU. We've been around for over a decade now, and we've been focusing on our activity and our tenements in the Bowen Basin, where we have a large gas resource and reserve base. We're trying to bring that gas to market, where we've effectively got 3 offtake agreements signed, and we're trying to prove those up and firm those up with some of the activity that I'll describe shortly. But essentially a small, nimble, agile Aussie company trying to bring gas to the market to take the pressure off prices and keep manufacturing going.
A good overview. One of the things you've been around for a decade, and you say that you want to get into production. What are the steps to get into production? What are those hurdles that you have to get over?
So firstly, it's having the resource, and so having the rocks. So we're up in an area in the North Bowen Basin, which is our principal area of focus at the moment, where we're close to the Moranbah precinct for export coal mining. So we know we've got coal there. We've got a producing asset next to us, which is the Moranbah gas project, which has been producing for 14, 15 years up into the small Townsville market. We've done some preliminary work over the years to identify the gas resource. We use Netherlands Soul as the independent certifier, and they've given us gas reserves, 2P reserves, 3P reserves, and contingent resources in that area. So we've currently got around 78 petajoules of 2P and a large volume, nearly 3,000 petajoules of contingent resource in that one asset area in the North Bowen Basin. So what we're trying to do is, having signed the agreements with Origin Energy and Energy Australia in Moranbah to supply, we need to firm those supply agreements up with deliverability data, flow testing, and also reserve bookings that will underpin the majority of those contracts. Those contracts to Moranbah are about 400 petajoules over 10 years, so 40 PJs per annum, and we'd like to get a fair chunk of that under the 2P category. As I mentioned, we've only got about 78 petajoules under 2P category right now. The work we've done since July hopefully will improve that. And what we have done since July, when we raised about $20 million, we have drilled 7 lateral wells, 2 vertical wells, for a total of just over 14,000 metres of hole and 8,500 metres of lateral wells, or lateral drilling into those vertical wells. And what we plan to do is put those on production tests, which is imminent. We had a bit of rain up in the field in the last week or so, which has caused the creeks to come up, and access has been a bit of an issue. So we let that dry out last week, and we're back at it this week, and we hope to be starting our production testing of the Sapphire 5 pilot wells, which is 4 laterals and a vertical well, in the next week and a half.
Oh, okay.
So that we can be in production test mode and get some idea of what the deliverability from those coals is, and therefore underpin the economics of a pipeline that has to come south to connect us to the and Moranbah region to the southern market, which is screaming for gas. So we do have an offtake agreement with a gas user who's developing a nickel project in Townsville. We have a little bit easier road to hoe to get that gas to them. So that is our second priority, if you like, is to service QPM up in Townsville. with a small development that will be off the back of the same sort of project we're just doing now. We do have another asset down in the Surat Basin, which we're going to get to drill hopefully early next year, to bring another 400 PJs closer to market, into the marketplace in Moranbah. So effectively, we've been very busy, intensive drilling, gathering data and opening up wells and coal to get to the point where we'll have some production testing data coming in the not too distant future, like in about a week and a half time. And the dewatering process will take some time. We don't yet know how long that will be, but we're certainly coming to the pointy end of a very active phase of operations.
And I think that's what I was going to ask you two things. One, it sounds to me like you've done all the hard work. It's taken a little while, but you are really quite close to the pointy end. In other words, getting there. I want to know, how long do the flow testing, the production testing take? What are the hurdles to get you into production? And I guess what I'm asking from an investor point of view is revenue coming in, gas flowing, which is a game changer potentially for Blue Energy. Well, it is.
Correct. We know we're sitting on a large resource and a producing basin. So North Bowen has been producing for other joint venture parties in that area for 15 odd years. So it's been de-risked in terms of the geology and the potential for flow and commercialisation. So we are a couple of kilometres from that facility, or the wells that supply that facility. So what we have done is put the wells in the ground that will deliver some production test data, which will allow us to say, okay, our wells are capable of flowing X 1,000 cubic feet a day. That will therefore scale up to be able to deliver into these contracts at so many million cubic feet a day, which will meet our contract. That will then underpin the economics of a pipeline. As you are aware, the state and federal governments have been studying the feasibility and commerciality of such a pipeline coming out of the North Bowen Basin, and this will just be another data point for them. But effectively for us, we can then say we have the gas resource and the flow capacity to deliver a pipeline of so many inch diameter down to Moranbah, which will support our gas contracts for the next 10 years. And so that opportunity for us would be for the shareholders to participate in infrastructure as a potential consortium member of a pipeline group, which would fund, own and operate a pipeline down to the major East Coast market. Now, we don't yet know what level of support financially the government might have if they deem this to be an economic exercise for them. But it is imperative for us to get our gas to market that this thing happens. So we will be pursuing this regardless of whether the government come in or not. So that to me is the key thing: demonstrating flow rates for this area, getting the reserve build of this project to underpin the economics of a pipeline and bankroll the development of the gas resource for those contracts.
So it's important that you get a consortium together to make that pipeline happen. How big is it? How long is this pipeline? Is it 450k?
That's it. Spot on. Good memory. Yeah, it's about 450 kilometres. The route is still up in the air in terms of which way is the best way. But I think the opportunity is there for our shareholders to benefit as part of a consortium to fund the project. Once we've demonstrated we have the economics right, and we can get a return on investment from a pipeline based on our gas coming through into our contracts with off-takers, then I think the financing will be easier, if you follow my drift, because there's a lot of money looking for a place to be housed and return. And if you can generate an annuity based on a rate of return from a pipeline tariff, the model has been well versed in this country over years, between some of the major pipeline companies that have come and gone and some that remain, and it's been very profitable. So We
As
are of the view
So
that
sorry to interrupt you, John. Where's the profitability come from? Just explain, because in my head I've got that's a hard thing, like that the pipeline, 450 kilometers of pipeline, it's a pipeline. Is the return from the gas going through the pipeline? Because you've got to build
correct.
it.
So the gas supplier or the gas buyer pay a transportation tariff. It's a bit like a toll road. Okay, you pay a toll every time you go down a tunnel or across a road.
Yep.
So once the capital's been sunk and you've put the pipeline in place, then the owners of that pipeline infrastructure charge a tariff for every gigajoule of gas that goes down it, and so that becomes then an annual revenue stream for the owners. So if you've got 20-year contracts, you can be guaranteed of a certain volume. You can be guaranteed an annuity every year, a revenue stream every year for that 20 years going forth. And that then provides the profitability or the profit once you've recovered the cost of the capital, the cost of the construction. So you might remember that in the early days, a lot of governments built the pipeline infrastructure, both gas pipelines and electricity, and the taxpayers paid for that. Then they sold it off at a handsome profit. And the one thing I'll point to is in over the last with the advent of the LNG facilities in Gladstone and Curtis Island, there were supply pipelines that were built to come from the gas fields up to Curtis Island. In one such case, I think the QCLNG pipeline from the Surat Basin up to Curtis Island was built for about $650 million. It was sold to APA for $6.3 billion.
Whoa!
And with it comes the annuity.
And with it comes the annuity. Yeah.
So, which is built into the price, obviously, the sale price. So my argument would be, why wouldn't a government want to invest in nation building infrastructure, which promotes manufacturing and the longevity and the growth of manufacturing to supply of gas, when it can turn it into a profit centre for taxpayers rather than just a loan?
But then why would you want to give away that annuity to have the, do you know what I mean? Why give it to the government? Oh, it sounds horrible, but why let the taxpayers have it? Why not have it all yourself? Is it because it's...
That's my argument. That's why I'm saying blue shareholders may have an opportunity to participate in that sort of funding arrangement. Now whether you could satisfactorily have part government ownership in something like this, that's another matter. The consortium may include semi-government
funding
entities.
Yeah. Okay. That's interesting. Curious as to how long are these things quite simple to do? In other words, clearly, ladies and gentlemen,
I love your sense of humor.
My pipelines well, do I? Even though, by the way, my dad worked for the Australian Gas Light Company, and he was involved with this, but I was quite young at the time and not interested. It's a gas pipeline. What do I care?
Just
so he'd be turning in his grave today with me saying, I don't understand. But it's complicated. How long would it take to build something like that?
I think once all the approvals are in place, and this is where we see government playing a pivotal role, if a pipeline like the one that we're proposing were to gain government support, then a state significant project status would confer a swifter regulatory pathway to approval. But effectively, once you have those approvals in place, you're probably looking at an 18-month to 2-year build.
Okay, so not too bad.
No.
Government of Queensland, are you in conversation with them at all at this stage? Because it sounds to me, as we said a moment ago, you're at the pointy end. Are you in conversation with them at all and explaining how important this is?
We are. We've been quite diligent in our communications with government, both state and federal. Having said that, you'll recall I was mentioning the joint KPMG study that was done, jointly funded by state and federal governments, to look at the feasibility and commerciality of just such a pipeline. So they are invested in the concept, and they're going through their checks and balances in terms of, is it feasible, is it commercially viable, and they've incorporated well, they've got KPMG to run the program in terms of also a consortium of GHD, the engineers, and Netherlands Sewell, who are the I guess the subsurface reserve certifiers who have an idea of the volume of gas there. And as I've said many times, the North Bowen Basin has scale. Notwithstanding, we've got about 3,000 petajoules in that North Bowen Basin under our 100% licenses. The remaining potential of the basin stands at about 15,000 petajoules of gas resource recoverable, which is around about 30 years of domestic gas supply. So if you were to tap into that with a pipeline and get the developments going, not only you've got jobs in the development, the pipeline phase, you've also got at the back end selling into domestic retailers like Origin and Energy Australia, who supply their customers, which can range from households through to manufacturers. So the value chain goes on to preserving and enhancing manufacturers' capacity to stay in business, but also grow their businesses through reliable long-term gas supply. And as Rod Sims always said, we need more gas supply, more new gas supply in the market to put lower price pressure on domestic gas prices.
Well, that leads me nicely into the fact that I'm talking to you today in December, and there's a lot of chitter-chatter going on out there about a cap on gas prices. Does that affect your project at all, John?
Not directly. I think our Bowen project is quite robust at the price caps that are being mooted, and I think the additional unintended consequence of a price cap may well be that the marginal projects, the marginal molecules sitting out there, gas molecules, may not be developed at such a price. If they are confined to selling into a domestic gas price of $10 to $13, it may disqualify them from even starting the process of development. They just simply won't be economic. So I think what that domestic price cap may do, depending on how long it is, how long it's in place for, it may limit the field as to what projects can come on next because of the straight economics. So that's one unintended consequence of putting a price cap on domestic gas. The other unintended consequence from a national point of view is if we are looking as a nation, particularly on the East Coast, at stable gas supply through a number of sources, be it domestic new supply through either Narrabri, North Bowen, Galilee or Beetaloo, but also importing LNG, which has been not just mooted, but there is serious money being spent on a couple of projects. If you are bringing LNG at, let's call it spot prices of about $40 Aussie currently, and having to sell into the domestic market at 10, you're losing $30 straight off the top. Now, I don't know anyone who's going to be doing that in a hurry. So effectively what will happen is it will exacerbate the gas supply problem by putting a price cap on domestic gas.
So are you saying that with a price cap, it's actually going to, that the outcome could be less gas availability across?
I think that's a real possibility. I really do. It's one of the unintended consequences, of course, because the ideal of having a gas price is to supply lower price gas to the domestic market, and that's the headline. But the unintended consequence is, well, if that's all I'm going to get for my gas and my costs go up, I'm not going to be able to recover my costs. Therefore, I won't bring that gas on.
Yeah. I won't bring the gas on. No. I'll just leave it because it's not economic. But from a blue energy point of view, is it only 10% of your output is going to domestic? Is that correct?
At the moment, we've contracted about 500 petajoules out of our portfolio of about 3,000 for the North Bowen. We've only contracted 500 petajoules of that. So that leaves us about 2,500 petajoules to be able to market to the highest price market. That may not be the domestic market going forward if there's a price cap on there.
Yeah,
there may be other parties requiring gas that will pay a higher price.
That gas pipeline that we spoke about before, which is to supply the domestic market, with the rest of the petajoules that you've got up there, how do you extract that and send it to market?
Well, it's in the same geographic area, so it's a matter of just joining up the various gas resources we have through our portfolio in that North Bowen Basin. So there'd be some extra pipeline work to connect it all in, but effectively that would enhance the profitability or the economics of a pipeline coming south from Moranbah into Gladstone, say. So the more gas you have,
Yep.
the lower cost per gigajoule you pay going down a pipeline.
Last time I spoke to you 3 months ago, we talked about the Surat Basin. We talked about the 854 block. I think I got that one right. And you spoke about the potential of developing that one more quickly, and therefore that could be a revenue stream. Give us an update of where you're at with that.
So we're going through a land access process now. We've done some technical work to find out the best place to do the appraisal or the pilot testing. We think we've got that now. We've got a few other options in that area geologically. So we're looking at which is the best place from an environmental point of view, from a landowner point of view, a cultural heritage point of view, to actually site these wells. We'll go through that process. Obviously, wet season is traditionally from November through to sort of late February, but you can get caught out like we did in June. So we don't want to be on the ground with a rig in the middle of December. So we will push that into next year, by which time we'll have all our land access sorted out, hopefully, and all the approvals in place.
So that'll be next year. Have you got an idea of when?
Probably second quarter.
Second quarter next year.
Yep.
All right, John, we are running out of time. I'd like you to do two things for me, if you could. A brief overview on price cap, a summary of what you think the challenges are with that, and then we'll go into 3 reasons people should be sitting up and taking notice of Blue Energy. But the macro first.
So the price cap, they're responding to a position that has been developing over the last 6 to 8 years. Rod Sims came out, or AEMO came out in 2014, and I presented this at a Noosa conference in 2014, saying there would be a gas supply shortfall by 2019. And here we are in 2022 with exactly what was predicted back in 2014.
Wow.
And the outcome is we had that opportunity of time to actually correct it by more supply coming into the market. There hasn't been, in my view, substantive increase in supply to the domestic market, which has come from only the LNG players. In other words, domestic exploration has stalled, and the numbers bear that out in terms of activity. So we haven't had that growth in exploration and development of non-LNG based gas supply. So I think we have squandered the time we've had to rectify the situation. We find ourselves now up against political solutions which involve price caps to give, I guess, the domestic users some comfort that they can see a lowering of gas price impost in their inputs, energy inputs. Now, the unintended consequence of that will be you'll take off the marginal molecules from ever coming to market if you put a price cap on that. So we would see that the opportunities for new gas supply coming in will be restricted. It may be that, and Energy Quest have come out and said that the Beetaloo won't work at $10 to $13.
Wow.
It's unlikely Narrabri will get up, potentially. That leaves the North Bowen and the Galilee. North Bowen has been in production for quite some time, so it has the resource, it has the scale. Bass Strait, I would be surprised if Bass Strait was economic to bring new gas supply on at $10 to $12. So that then puts a very serious doubt on the southern market for getting any arrest in decline that's been seen in those Bass Strait fields. So I think the unintended consequence of a price cap to arrest high energy prices is the unintended consequences are quite severe in terms of mid to long term gas supply for the country. As I mentioned before, LNG imports won't work at $10 to $12. So that's one thing. I think we are somewhat quarantined because we are a low cost operator. We believe that our project is very robust in that $10 to $13 range.
Okay.
So we wouldn't necessarily be impacted negatively on that. And we have quarantined, I guess, 400 to 500 petajoules of our gas resource to the domestic market. We're quite comfortable with that, but that leaves us with 2,500 petajoules of gas we can market to a higher gas price market should it come to fruition.
So well positioned, I guess, from a balance point of view, that it's not going to affect blue energy, but it will affect the Australian domestic gas supply, and that could be a problem further down the track. Not today, but tomorrow.
And again, Kerry, the devil's in the detail, so we don't know how this is all going to play out until we see the detail. And I think the ramifications for current gas contracts and resetting prices within those current gas contracts could be quite severe. And I would hasten to add that we should be cautious when we tinker around with sacrosanct contracts on the basis of, I guess, a political solution.
I can hear some of the people out there screaming at the screen right now, saying, "We want cheaper gas supply. You guys you guys need to make sure it happens." But
and indeed, please go ahead and do the same thing for petrol, for milk, for beef, for eggs and cheese. All those things feed into the cost of living.
Yeah, very, very good point. All right, John, we're running out of time. Give us 3 reasons. Last time you were cheeky, you took 4. Let's see if we can keep it to 3 this time, but I might give you 4 reasons people should be sitting up and taking notice of blue energy right now.
I think the potential intervention in the gas market by the government will only add to the attractiveness of Blue's asset portfolio, because we are a low-cost operator and we can operate within the realms that they're talking about. We have reserves, we have a resource. We are at the pointy end of getting production test data to demonstrate flow and deliverability, and the infrastructure play still sits there. We have to bring our gas to market, so that gas to market can go into Townsville through existing infrastructure, or the bigger prize is bringing our large gas resource down to the Gladstone market or the Wallumbilla market through infrastructure build, which we hope shareholders will have an ability to partake in.
I thought that was fascinating when you spoke about that. John Phillips, Managing Director of Blue Energy. There you have it, ladies and gentlemen, a low-cost operator, and right now they are at the pointy end. Go check them out. The ASX code is BLU. John, great to see you again, and we'll see you after Christmas in 2023.
Thanks very much, Kerry. Appreciate the opportunity.